Hello everybody. I recently saw a YouTube ad in relation to the eToro and its copy trading platform. Apparently Simon and Joe are two traders. Simon is using the services of eToro and Joe sucks because he doesn't, basically. Well, don't worry, Joe. You might actually be smart not using the services of eToro. In today's video, I will try to show you my reasoning behind the copy process, and now I will tell you why you will most likely lose your money in the long term. Now, first of all, let me ask you this. eToro is marketing this trading platform, this copy trading platform, as something new and revolutionary. Let me ask you this. Do you really think that they will market this hard their platform if they're not making money out of this? Of course not. Having said all this, let me show you. I mean, everything is on their side. Look at this. Look at this message right here. Get copied, get paid, become a popular investor. Here you clearly see the first red flag. So what is this message telling you? This message tells me that if you're a successful trader, meaning a trader that has a lot of copiers, you will get paid a certain amount of their capital or whatever. I mean, are you kidding me? Let me paraphrase this for you. eToro is recruiting those top traders, and eToro is paying those top traders money from their followers. The more followers those guys have, the more money are they going to make. Doesn't this ring a bell in your head? This particular situation reminds me of an episode of a show that I really like. Here it is.
How is this not a pyramid scheme?
All right, let me explain again. Phil has recruited me and another guy. Now we are getting 3 people each. The more people that get involved, the more people who are investing, the more money we're all going to make. It's not a pyramid scheme. It's not even a scheme per se. I have to go make a call.
So things are starting to get interesting. However, let's move on to the copy systems explained. So this is on the eToro site. And here we clearly see the rules of the copy trading system. So I will not bore you with the all the rules. I will not read all this. If you want, you can go on this site and check this for yourselves. So copied trader is basically eToro. You know, the person who are you copying on the eToro platform, and the copier is the user, or that is you. You know. So as I said, there are some rules, whatever, minimum amounts, etc. Things are starting to get interested from this paragraph, the please note paragraph. Now let's read this paragraph. The trades will all open in your account at the same time. You will see them as a slight loss, which reflects the spread between the buy and the sell rates. To show you a real-time representation of the funds you will receive if you close the trade. Okay, that's normal. Most brokers do this. That's no red flags here. new trades will open at the same time as the copied trader opens them, and use the realized equity balance plus invested funds as the basis of the proportions of copied trades. For example, a trade opened with 10% of the copied trader's realized equity will open a trade in your copy account with 10% of the realized equity in the copy relationship. And here is I can't believe how this is legal. Here lies basically the heart of the whole scheme. Let's read out this paragraph as well. However, there is always however and but in those terms and conditions. However, the proportion can change when the copied trader changes their available balance. This can occur when the copied trader makes a deposit or withdrawal. When any of these events occur, there is a change in the funds in the copied trader's account, and you might notice trades that have a different proportion than before. When the copied trader closes all open trades, the trade size proportions between their account and the copier's account are reset, equal once more. When the copied trader closes all open trades. I mean, how is this legal? How does that work? First of all, you can't actually verify the copied trader actual capital because this information should be classified. Not a single broker would simply disclose its client capital to everybody. That is simply impossible. So they can basically invent whatever value they want. They can change the available balance basically whatever they want, and you simply cannot verify the balance change. You simply can't. So let me show you some calculations and why I think the whole thing is a sham, and why I think the whole thing is very, very shady. So now let me show you my reasoning following the information we just read, and I will explain to you why I think that at the very least copy trading is very questionable and shady. Now let's say that you invested 100 bucks and that the copied trader invested 100 bucks as well. So you both have a capital of $100. You place a position on the market and you risk 10%. 10% is quite a big risk, but let's say 10% just for easier calculation. This in turn means that you both risk $10. So you invested $10 on the market. So, and you keep this position. You're happy with it. Maybe the price went a little bit up, or maybe it went a little bit down. And as time passes by, your account remains unchanged, so you don't add anything to it. As you can see from here, there is plus $0. However, the copied trader decides to add 400 bucks to his account. How does that change things? Well, this is the unknown part, and I believe this is the essence of their scheme, basically. I believe this is basically a legal scam, what they're doing. So, after this increase, let's say that the trader puts another position, and again he's risking 10% of his total capital. What is the trader capital in this case? Well, it's $100 plus $400, so that is $500, which translates to, or if we risk 10% out of those 500, that means that the trader is risking $50. However, how is this new position really translated onto the copier or your account? What is the change of the proportion? Are those $50 directly added to your previous positions? This calculation is very, very shady, and I believe that either they are directly adding this new position to your account, or either they use some sort of algorithm that is again against you, and basically it's the new position will put an immense strain on your account, blowing it up eventually. So how does this changes things? Well, the copied trader has a total risk of $10 plus $50, which is $60 bucks. Divide this by 500, which is the trader's total capital, and you will get a risk percentage of only 12%. However, the situation for you is totally different. If they translate directly this sum onto your account, you are risking 60% of your capital. 60%. Your account is basically margin called within two positions. That is absolutely huge, and it's very dangerous. You should never try this. This sounds really shady. Please don't copy anyone. Don't follow blindly everything you see on the internet, in videos, on eToro, etc. Find your own strategy that sounds logical to you, and that do you think that I'm crazy? Please let me know in the comment section below. Have you ever tried copy trading? Can you tell me how eToro actually calculates this percentage? Maybe copy trading is beneficial. Please let me know in the comment section. Share your story. If there are any profitable copiers out there, please let me know. Share your trading history. And I really hope that you like the video. If you did, please subscribe, comment, and put thumbs up on this video.